So next for chapter 10, we're going to look at how to use merchandise sales as an account. So when I actually sell product, I'm going to have 5 new accounts that I did not have when I was a service business. I'm going to have something called sales. This will actually be my revenue account. I'll have something called sales tax payable. This is a liability account, and this is when I collect tax from my customer, and then I have to pay it to the government. I'm going to have something called sales returns and allowances, and this is attached to the sales accounts. So basically, the net sales would be all of my sales minus returns and allowances. Then I'm going to have an account called customer refunds payable. So this is money I owe customers. And finally, sales discount. And we'll talk about that. So sales returns and allowances, and sales discounts are all tied together under the same umbrella. So here we have our new accounts under liabilities. Because it has the word payable in it, it's these two accounts. And over here, sales, returns and allowances, and sales discounts. So these are tied to this account. So let's talk about the sales account. It's a revenue account. Instead of having a fees earned or some sort of fee account when I generate money, it's going to be called sales. I will always credit it for the selling price. For what I sell the product for, I will credit the merchandise for my sales account. So if I made $100 sales for cash, I would debit cash because I'm getting money for $100, and I would credit sales for $100. But if I sold a $100 item on account, which is what most businesses do when they sell to retailers, I'm going to debit accounts receivable and credit sales. So my sales account is actually considered a sale even though I haven't got the money yet. Now, sales tax payable is when customers have to pay taxes. So if I'm selling to my end user, they have to pay sales tax, which I have to collect. And then when I collect it, it's going to go into a sales tax payable account. And finally, every so often, I'm going to have to turn around. So I credit the account when I collect the sales. And then when I pay to the IRS or to the government, I'm going to debit account, or if product is returned. So let's look at how sales tax payable happens. Hold on, let me move me over a little bit. So if my cash sale is $100 plus 5% sales tax, here's my journal entry. So I'm going to collect $105 cash. My sales will be credited for $100, and my sales tax payable will be credited for $5. But my real sales is only $100, not $105. Now, when I sell, this is for cash. When I sell on account, here's what it looks like. So I'm going to charge my customer $105, but still the sales is credited for $100 and the sales tax payable is credited for $5. So this is how you journalize sales tax. Next, we're going to look at sales returns and allowances. So a sale return allowances is called a contra revenue account. This is very similar to the accumulated depreciation, which is a contra asset account. But a contra revenue account is the opposite of the sales. It normally has a debit balance, whereas sales normally has a credit balance. And it'll be seen on my income statement. I debit this account so that I can actually see how much I have in returns and allowances. Let me show you what it's going to look like on a journal entry. So the credit memo is what will generate this. So if the customer returned $48.30, remember we showed you that credit memo, I'm going to credit the customer for that much. However, I'm only going to debit sales returns for $46 and debit sales tax payable for only the amount of the tax. Okay, so next we're going to take a look at the last slide for sales returns and allowances. Sometimes when I go from one year to the next, I might actually have a different balance in there. So my returns and allowances, you really want to keep an eye on it to make sure that when a customer returns in 1 year, it's actually credited to that period in time. This concludes Introduction to Journal Entries for Sales and Sales Tax, video number 2 for Chapter 10.